Want to bring in Barry Bannister, Chief Equity Strategist at Stifel. Good morning to you. I'll just ask you straight up, what do you do on a morning like this?
Well, I wouldn't panic, and I certainly wouldn't hand-wring or complain, and I'm seeing a lot of that these days. I think we have to analyze it as a stagflationary shock, something that we expected in a somewhat milder form this year. We thought that growth would just slow and inflation would prove sticky. Now it looks like growth will be a little bit weaker than just slowing, and inflation would be a little bit higher, depending on the permanency of the tariff arrangements.
You look at the market, Dow down right now, it opened off about 1,250 points or so. Do you say to yourself that there's an opportunity to buy something on a day like this, or you say this is a falling knife that's not worth catching?
Well, when you look at the March 13th lows, we're just retracing back to those. We did think there would be a tradable rally at the low. In fact, I was on your show or on your network with John Fort at 4 o'clock the afternoon of the 13th and said we had a tradable rally. We did. Lasted about a week until that auto tariff appetizer. And then a couple weeks ago, it began to fade back down. A 10% correction is just a sign of a slowdown. If you go to the high teens, like late 2018 or early 2016, then you're discounting a significant slowdown, but not a recession. And then, of course, the high 4,000s for the S&P 500, that would be a 20% drop, and that would be a recession. I don't think we're going to have a recession. I think we're just going to hit consumption a little bit, and we're going to have a little more inflation than we expected. The labor market is holding up just fine, and I expect a good number tomorrow. So I would not overreact to this. I would be looking for the sort of what we call the defensive value. These are companies like Staples Healthcare, waste handling, utilities, on any pullback.
So Barry, I've talked you up in the past because you were right in when a lot of people were negative in 2022, 2023, 2024. And God, Krzyzewski, your guy, Ron, loved you then. He was in recently, and I don't think he's going to let you say what you want to say, but you've been kind of bearish since the beginning of this year, long before any of this actually happened. Are you more bearish now because of this, or is it basically what you said? Growth might be a little worse than we thought, and inflation might be a little hotter than we thought. But have you moved? Have you gotten, have your targets come down from where they used to be? Because I think you were already one of the most negative on the street.
When we entered 2025, we had done our full year outlook like the regular sell side dog and pony show, where you publish an outlook. And we had a 5,500 S&P 500 target for the year. The street was around 6,700, and I haven't changed that and don't really have any plans to change that for a target price. What we're seeing is that yields, particularly the real yield, we like to look at the 10-year Treasury inflation protected security or TIPS yield. That's the benchmark for the risk-free rate that equities have to compare themselves to. As that comes down, it insulates some of the downside for the S&P 500. You can have a lower PE and still have a lower risk-free alternative, and therefore the market's in somewhat stasis. So 5,500 is our target.
Yeah, I can see Ron now when he sees you. He's like, there's my guy. He's like glad, patting you on the back. You were at 5,500 and the street was at 67, and we're not far away from what you said. And that was a non-consensus call at the beginning of the year when you made that.
Yeah, we're always trying to look forward. And right now, our main focus is actually not on the inflation that everyone's talking about. It'll be on the GDP effects. The top 10% of this country spends 50% of the money. That's part of the problem with why we have populism, is that we are a highly wealth-skewed country, and we have hollowed out a lot of middle America. And that, you talk about the trade deficit having a capital account surplus. Well, cheap capital benefits the rich guys. And, we need to understand that populism is here and it's real. 9 years ago, by the way, Donald Trump was asked about the electoral candidates he was running against. And he said, I've got more in common with Bernie than I do Hillary. And, populism can be left or right wing. But if you think of it as a horseshoe, the left and the right at the top of the horseshoe, but they bend inward. There's more in common with the populism and flattening out the wealth disparities than you would realize.